When it comes to investing in the stock market, people usually decide between growth investing or income investing. And it's a pretty clear difference between these two. In one of these instances, you are investing in growing companies that are often not yet profitable, but they are growing revenues very fast. And then on the other hand, you typically have well-established companies that are actually sharing a portion of those profits with the shareholders in the form of dividends. Now, a lot of people out there think that dividends are something that happens always on a quarterly basis. However, there are some companies out there that pay annual dividends, biannual dividends, and then of course there are monthly dividend paying stocks. Now, this isn't by any means a new concept at all, but because of the overall returns we've been seeing in the crypto markets and the stock market lately, a lot of people have been interested in monthly dividend paying stocks because they're looking for that consistent monthly cash return from their investment. Now, in terms of a monthly versus quarterly versus biannual versus annual dividend paying stock, one is not necessarily better than the other. It really just depends on your personal preference as an investor, as well as what you're actually doing with that money. If you're young like me and you're simply reinvesting your money, it doesn't really matter if you're getting a dividend on a monthly basis or a quarterly one, because you're pretty much just putting that same amount of money back into the issuing stock no matter what. On the other hand, if you are in retirement age and you're actually living off of your monthly dividends, well, that's an entirely different story, because you would rather be getting 12 payments per year instead of only 4 or possibly just 1 or 2. Now, that being said, guys, we're going to be covering 10 monthly dividend paying stocks, and it is a range of some lower risk as well as some higher risk investments here. It's in no particular order here, guys, and this is a very basic overview of what these particular companies do. By no means is it meant to be a full-fledged research report or anything like that. So definitely do your own research above and beyond this video before investing. Of course, as always, I am not a financial advisor. This is not any sort of financial advice, and do your own research before investing. So that being said, guys, let's jump into the first monthly dividend stock on this list, which is Agree Realty Corporation, trading under the symbol ADC. So this REIT here currently pays out a dividend yield of 3.87%, and you're going to find that a lot of the companies listed here are actually REITs, or a real estate investment trust. That is because the monthly cash flow from real estate makes it very easy for these companies to, in some cases, issue those monthly dividends. So most of these options we're going to cover here are going to be REITs. So this REIT here in particular focuses on tenants that have a very strong likelihood of sticking around, such as Lowe's, Walmart, and Wegmans. And they did perform well during the pandemic. So let's jump into M1 Finance and take a look at the share performance over the last 5 years for this company. So as you can see, looking at the chart here, there was a pretty nasty sell-off around the pandemic, which is when there was a very large amount of uncertainty around real estate because of closures of businesses, etc., etc. But since then, it has had a nice return out of the pandemic, and even with the recent market volatility, this REIT in particular has held up pretty well and seems to be a relatively safe investment, or a safe haven investment, based on that dividend yield currently being below 4%. Also, guys, another handy tool here for M1 Finance investors, including me, is that looking at the bottom, each of those square Ds indicates a time period when a dividend was paid out. So it looks like prior to the pandemic, they were a quarterly dividend paying stock. And then sometime after the pandemic, they made the decision to become a monthly dividend paying stock, which is why they are now included in this video. Coming in at number 2 on the list here is going to be a REIT that is much further on the risk side of the spectrum than the last one that we looked at. And this is ARMOUR Residential REIT Incorporated, trading under the symbol ARR. Now, based on the pessimism in the market and people's fear of the overall housing market, the dividend yield on this particular REIT has skyrocketed. But as you're going to see, that is because the share price has cratered. So that in turn has pushed that dividend yield into this ridiculously high territory. By no means am I saying this is something you should invest in. However, I did want to include it on the list because it is nonetheless a popular monthly dividend stock. So this is a REIT that specializes in residential mortgage-backed securities. Now, if that does ring a bell, that is because that is the financial product that contributed vastly towards the 2008 financial crisis. Now, yes, there have been major changes to regulations in the housing market and mortgage applications overall, but clearly there is still a large or high degree of pessimism surrounding the housing market based on the share price, which we're going to see shortly. So that being said, guys, let's jump in and take a look at that share performance now. So as you can see here with the ARMOUR Residential REIT, it has been a disaster over the last 5 years. If you had invested in this over the last 5 years, you would be down 76.2% had you bought it 5 years ago. Now, of course, the reason why it's on this list is because some people are viewing it as an opportunity since it has sold off so much. However, do keep in mind that this has been on an overall downtrend over the last 5 years. So this is very, very far out on the risk spectrum, the riskiest monthly dividend stock on this list. So just keep that in mind, but I did want to include them nonetheless. Number 3 on the list here is Dynex Capital Inc., trading under the symbol DX. This is a REIT who invests in mortgage bonds and securities, so it is similar to ARMOUR Residential REIT. However, their dividend yield is currently just above 10%, so I'm imagining, which we'll find out shortly, they haven't had as much of a sell-off in the underlying share price as ARMOUR Residential REIT. Now, the reason being might be the fact that this particular REIT owns both residential and commercial properties. So I would imagine that commercial property segment is hedging some of that risk for them, because looking at ARMOUR Residential, as the name suggests, this REIT specializes in residential mortgage-backed securities. Nonetheless, let's take a look at Dynex Capital stock and see how this REIT has performed over the last 5 years. And so while it has had a bit of a sell-off since it looks like June of 2021, it has not been nearly severe as the previous REIT that we had looked at, but with a yield above 10%, it could be a good potential reward if you are overall confident about the residential and commercial real estate markets. On the other side, there is some risk to be considered, so bear that in mind before investing. Number 4 on the list here is EPR Properties, trading under the symbol EPR, currently paying a dividend yield here of 7.18%. So if you're not so much interested in residential and, basic, boring, big box commercial real estate, this might be a REIT that interests you that does pay a monthly dividend. This is a REIT who invests in amusement parks, movie theaters, and other entertainment-related properties. So again, this is still going to be commercial related, but think entertainment-related venues. Now, looking at the share price, as you guys can imagine, there was a mega sell-off of this REIT during the pandemic from, it looks like, around $70 a share, going all the way down to below 20, which is just insane. But that is because pretty much every entertainment venue, basically in the world, was shut down for a period of time. Since then, they have had a nice recovery, and there still is a decent dividend yield on the table for those who are bullish on entertainment-related real estate. Number 5 is the SL Green Realty Corp, trading under SLG. This REIT has a yield here of 7.8%, and this REIT specializes in office space in New York City, owning over 35 million square feet in Manhattan. Now, honestly, guys, I'm just going to be upfront with you. As one of the individuals that left New York, and not the city, but upstate New York, and relocated to South Florida, looking at all of the people that I have met who are also from New York, mostly though from the city, I am personally not bullish on New York City or New York City real estate. But if you actually are yourself, you're not alone. There's a lot of people who are. And this is a REIT where you could get paid a monthly dividend while owning, a slice of Manhattan real estate. Do bear in mind here, guys, that no dividend payment is guaranteed, and some of these REITs have actually paused dividends during hard times. So that is something you also want to consider before investing, is the overall payment streak, or how long that particular company has paid out that dividend every single month. So if we look at the share performance here for SL Green Realty Corp, that New York City REIT, we can see a massive post-pandemic sell-off and then a rally. Then it traded sideways for about a year, but once again, we've had a pretty stark sell-off here. Not nearly as low yet as the pandemic, but not too far off either. So perhaps there are other people out there who are concerned about this New York City real estate, and over the last 5 years, you would have been looking at a loss of 57%, so it really would not have been a good investment over the last 5 years. So before we get into the next 5 monthly dividend stocks, I want to quickly mention where could you possibly buy stocks like this, and one of the best options out there is none other than M1 Finance, which is where I have my own dividend investments myself. So with M1 Finance, you can take advantage of that automated rebalancing as well as a portfolio level dividend reinvestment. So if you are looking to earn monthly dividends and then reinvest them automatically, commission free, M1 Finance is a brilliant platform to do that. If you guys want to check it out, I do have an affiliate link down in the description below. And I also have a completely free 30-minute M1 Finance training that walks you through step-by-step how to get started as an M1 Finance investor. So be sure to check that out at the end of the video, guys, and I will give you a reminder at the end, so don't worry about doing that just yet. Okay, guys, so coming in at number 6 here is our first stock that is actually not a REIT, and that is the Pembina Pipeline Corporation, trading under the symbol PBA. So this company here pays a monthly dividend and currently has a dividend yield of 5.83%. So this is a pipeline transport company that has been paying monthly dividends since 1998, which is an incredibly long period of time. That being said, it is a Canadian stock, so do keep in mind that if you are a US investor, you will incur a 15% dividend tax, so that should be considered before investing. Now, if you take a look here at the share performance, we can see at the bottom that consistent monthly dividend payment, every single one of those Ds, and overall this share price has been relatively flat over the last 5 years, giving us an overall 2.5% return. So pretty much, you would have done okay on this stock, because while owning it, you're not going to make a ton of money on the share price, but you would have made that dividend every single month while having your underlying investment not really fluctuating too much in value over the long run. Obviously, in the short term, guys, during that pandemic sell-off, this pipeline went from 40 down to a little over 10. So that's a massive swing, but it came out of that relatively nicely here. And honestly, I'm very bullish on oil. I have a large investment in an oil LP myself. It's not a monthly dividend payer, but I do like oil investments right now. So it is one that's also going to be on my watch list going forward. Number 7 on the list here is another company that is also not a REIT, and this is Main Street Capital Corporation, trading under the symbol MAIN. Now, this company here has a dividend yield of 6.91%, and they are what is called a BDC, or business development company. So they work in the B2B segment, or basically sort of imagine a consulting firm that helps out other businesses. Now, this company in particular here doesn't just help out these companies through consulting on a paid basis. They actually take a stake or an investment in these companies, and they specialize in focusing on investing in lower middle market companies. Let's now jump into M1 and take a peek at the share price. So as you can see, there was that pandemic sell-off when there was the massive closure of businesses that proportionally affected smaller ones. So that's why this particular stock sold off from the mid 40s range all the way down to, it looks like, somewhere around $15 per share. Since then, it has come back up to about $38. So over the last 5 years, you'd be looking at a small loss of 3.86% on your share price, but between the dividends, you would have honestly had a positive overall return. Okay, guys, so coming in at number 8 on the list here is AGNC Investment Corp, trading under the symbol AGNC. Now, this is another REIT which currently has a dividend yield of just shy of 13%. So given the fact that it is on the higher side of our spectrum here, we are going to see that the share price has sold off. So there is more risk at play with this monthly dividend stock. So this is a REIT who doesn't own properties outright, but instead manages mortgage-backed securities. So we've kind of seen a theme here of these MBS-related investments selling off. If you're bullish on mortgage-backed securities, there may be an opportunity here, but personally, it's not something I've ever invested into, not something I'm likely to. I would much rather own the underlying real estate, through traditional REIT exposure. That being said, I don't have any investments in any of these REITs, and that's because I have large investments on my own in real estate, private real estate deals. So for me, I'm already probably overly diversified into real estate, so it doesn't really make sense for my portfolio. That being said here, guys, similar to the other stocks, there is that risk of the mortgages right now and some fear in the housing market, which has spilled over to the share performance. So let's take a peek at that now. So over the last 5 years, you'd be looking at roughly a 50% loss on your investment here. So that really would not be a very good investment overall had you bought in many years ago. That being said, we are nearing where we were at during the pandemic, not quite there yet. But it just goes to show you how fearful people are in the market right now. And I'm not sure if like your average person, on Main Street is aware of how much, pessimism there is surrounding the overall housing market and real estate market right now. But it is, slapping us right in the face here, looking at stock charts just like this one. So number 9 on the list here is STAG Industrial Inc. This is another REIT, but they focus on single tenant industrial properties. So you're going to want to think things like warehouses, distribution centers, etc. They focus on high quality, long-term tenants and not having multiple tenants in a building. So that way they're not worried about having a partially rented space. So all of these things lead to a solid business operation. Now, that being said, the dividend yield on this is only at 4.7%, and that is based on what I just covered there, which is that risk-reward profile. There's not nearly as much risk here associated or priced in with these industrial properties compared to, like, for example, residential mortgage-backed securities. So you're always going to get a proportional return with your investment based on this risk that you are taking. So that being said, let's take a look at the share performance here of STAG Industrial Inc. So with STAG, you would have had a positive return here over the last 5 years of 13.91%. So it has been a really solid performer. And over the last basically year, it has had a pretty steep sell-off. So there could be an opportunity here to take advantage of the sale on a long-term investment. And then lastly, guys, coming in at number 10 is the most popular and well-known monthly dividend stock, and that is the Realty Income Corp, trading under the symbol O. So this stock currently pays a dividend yield of 4.37%, and it has one of the highest credit ratings among all publicly traded REITs available today. Now, that being said, they have increased their dividend over 114 times over the past 26 years. So they're a very solid and very consistent dividend payer, probably the highest quality monthly dividend stock you're going to find in the REIT category. So as I'm sure you can imagine, the share price has most likely done pretty well. So let's take a peek at that now. And this is the best one on this list here over the last 5 years, generating a return here of 22.99%. And it really hasn't sold off too much in the recent market volatility. So it might be one that people want to consider here. But that being said, you also want to worry that potentially an investment that hasn't sold off, might have the potential for for a rug pull in the future. It's just something else you want to consider, and just a very general disclaimer I wanted to make here. But anyways, guys, that is going to wrap up this list here of monthly dividend paying stocks. I hope this helps you to start your further research on what might be a good fit for your portfolio. Like I said, if you're looking to get your portfolio started, be sure to check out my affiliate link for M1 Finance down in the description below, and also make sure you utilize that free training, and I'll show you step by step how to get started with this platform. Thanks so much for tuning in here, guys. If this is your first time seeing me, be sure to subscribe and hit that bell for future notifications, and as always, I hope to see you in the next video.